Jesse Allen here, and pleased to have joining us here today. We have Matt Erickson. He is the Agriculture, Economic, and Policy Advisor with Farm Credit Services of America. Matt, thanks for joining us here today. How are you?
Good, Jesse. How are you?
I am great, Matt. Thank you for making some time to join the show here today. And I just wanted to start. I know recently you had this talk at NCBA, the Cattle Industry Convention, just looking at the fundamental outlook for agriculture 2021 and beyond. And as we look at the ag economy, we look at the markets, we look at the bottom line situations of a lot of farmers. We've seen some good profitability here the last few months in the grain markets. But just overall, to start, what is your general thoughts of where our ag economy is at right now
Yeah,
as we work into the back half of the year?
absolutely. And Jesse, thanks for having me on. And we had a really good discussion at the NCBA convention, and just the folks that were at the convention. Overall, it's kind of interesting where we've been, over the past year, as well as even the past decade of where American agriculture has been. If you look at last year and what we went through, first and foremost, it's just unprecedented with what we went through back in 2020. And when we were going through that time during a pandemic, I think a lot of us, it just came out of nowhere. And I remember back when I was working up on Capitol Hill, the first couple months of 2020, it was almost like we heard this thing was over in China, but we never really thought what it could be if it came over here to the United States. And then when we went through the winter of 2020, even through the summer of 2020, we saw a lot of holes in our supply chain system when we had to be reactive to those things and making sure that we help our producers out there with that response. But if you look at the economy back then in 2020, it really sets up the conversation of what we're going through today. And when we shut down the economy, I think a lot of things just really happened. And what we knew. And we had restaurants going out of business. We had a lot of things that consumers like to do just really go out of business or shut their doors down because of the pandemic. And as we enter through 2020 into 2021, we always knew that we were going to have demand outstrip supply when we were going to reopen the U.S. economy. And right now we're expecting to see about a 6 to 7% GDP growth in 2021. Looking at it last year, we had about a 3.5% contraction to U.S. GDP, and so we're starting to see things come up to play here. And what's side of the story, the story is we're seeing high exports, we're seeing high consumer demand, and we're seeing some of these weather issues play out, and all of those are bullish trends that we're seeing in the agricultural economy. And Jesse, what's really interesting is when we went through 2020 into 2021, we've also seen a lot of government assistance that's been put out there. Just with folks with losing their jobs or things getting shut down, getting that assistance out to producers. But what's interesting is when we've seen this, we've seen a lot of personal savings being spent because consumers didn't have anywhere else to go with spending their money, so they just put it in personal savings. And so a lot of that has been driving consumer demand. Folks are getting out to restaurants, and all of those are bullish indicators for American agriculture.
Well, Matt, I know as well the Kansas City Fed District reporting, additional increases in farm income. We're seeing that loan repayments, the rates there, they're increasing rapidly, and loan demand is being subdued somewhat here as we get through this year. Can you speak to that a little bit and just how that translates into what our farmers and ranchers are seeing with their bottom lines right now?
Yeah, I think we've got to start off with, the export picture. And, really since last fall, we saw a really robust increase from China with regard to the product that they need with regard to corn and soybeans. And so we've seen a lot of U.S. exports over to China on the corn and soybean picture, which is also beefing up demand for those products. Second, I think you've got to turn to the South America weather picture and what their experience was with last year's crop on their end. We're seeing their soybean crop, their corn crop really got hit hard by drought, and some of their corn crop got hit hard by frost issues. And so that drought condition in South America really drove, a tight supply on a global perspective when it comes to those two key commodities. And when you look at the domestic picture, what's also interesting is we're running on tight supply of corn and soybeans here as well. And you look at the soybean picture, we're at an incredibly, low stocks to use. I think we're at about 3.5% for soybeans, and I think just about 7.5, 8% for U.S. corn right now. So again, all those factors right now going into an incredibly tight supply picture really, helps drive up those prices. And when we see, some of these things drive up price, and we see some of these input costs kind of lag, and we'll get to input costs here moving forward. That really helps the bottom line of producers, where you see these, key factors of demand, robust, exports. We've got high consumer demand. All those things are lifting up the price for some of these commodities. But I will tell you, Jesse, it's been a breath of fresh air a little bit, because I'll tell you that over the past decade, we've seen a low price environment. And when you talk to farmers and ranchers out there, it's good to be able to produce a crop where you can make a profit and take advantage of some of these high prices. And so a lot of that can be maybe building up some of that working capital, reducing some of those operating loan or some of those loan payments that producers have to deal with every year. So it's the picture right now has been a definite welcome for U.S. agriculture, in particular farmers and ranchers.
Well, Matt, you mentioned input costs, and I wonder, moving forward, we look at the supply demand picture, and we look, you mentioned this earlier, the supply chain issues that we have. How much do you think supply chain issues are going to impact our cost of inputs and the general economy moving forward? And talking about cost of inputs as well. I mean, do you see those continue to rise as well? How's that all going to tie in with everything going on right now?
Yeah, I think probably the biggest question I get from our customers and from farmers around the country is inflation. And we knew coming out of this, and I don't want to say coming out of this pandemic, I should say as we start to reopen and get things back to a new sense of normal in the U.S. economy, we did expect to see inflation pick back here a little bit. I don't think anyone, a lot of folks were maybe saying, 3 to 4%, but, now we're at, levels around 5% inflation growth. And, so we are seeing a general level of price increase out in the U.S. economy. But again, that's driven a lot from demand outstripping supply. And I think when we get things, if we can get some of these systems back up and going, I do see the situation where demand won't outstrip supply as much. And so hope process is back in place and going up a little bit back into normal conditions. So some of these transitory factors I think will come back to rather normal, given that we can get this Delta variant and some of these different variants under control here a little bit. Jesse, what I think is going to be interesting here as we look forward, is going to be the corn and soybean complex and the fertilizer price increases that we are seeing, especially when you look at potash and some of these nitrogen prices that are out there. Generally, we have seen a little bit when we look at the past year, we have seen fertilizer prices kind of lag to what commodity prices have done this year. But certainly, I do think, given where things are today, that could have an indicator and play and be a factor into terms of what farmers grow next year when they look at whether to plant more corn or more soybeans next year. So fertilizer prices are going to be a big heavy indicator on the market as we move into 2022.
An interesting thought I had, maybe I can get some of your thoughts here as well. We see farmers, a lot of them repaying some of these operating loans, maybe able to save some capital and kind of add some back into the operation. But, we obviously have the issues out there on the supply chain side of getting new equipment, new tractors, new combines to some respect, new pickup trucks, you name it. New pieces that could go into the operation. Are you hearing from a lot of farmers and ranchers here as we get to the back half of 2021? Are they looking at spending on new equipment, new pieces for the operation, or are they more, looking to maybe save some of that capital back here with some of the unknowns out there with supply chain issues and COVID, et cetera, et cetera?
Jesse, I think it's a mixture of both, and it really depends on the farmer situation, what their financial outlook looks like. But really, it hasn't been a one size fits all when I talk to customers. It's, they have their strategy. They're going through, this year in terms of, what can I do? What's my strategy moving forward into 2022 as well as 2023? And so, it is an opportunity where, farmers can build up that working capital. And it never hurts to have options, in terms of, if you have higher working capital, what you're going to do with that working capital. And so, that's one of the things that we do, at Farm Credit, is educate our customers in terms of, here's what the market outlook looks like. How can we be better prepared and help you, provide that service in terms of what the market looks like and what others are looking at as well. But you look at the situation right now. We still have historically low interest rates. It's a good time for farmers to take a look at their financial situation, to take advantage of some of those to take advantage of the low interest rate environment. But for the most part, I think here, there are opportunities within the market where farmers can look at their cost structure, look at their profit structure into 2022, and manage appropriately.
Well, and you mentioned interest rates there, and of course, we just had Fed Chair Powell. There was some talk we might see that rise. There's some talk of tapering, but no rise in interest rates quite yet. But I have a sneaking suspicion that could be pretty close around the corner for us here, Matt.
Yeah, and I think when you look at the 10-year Treasury and some of these interest rate variables, you look at the past year when the pandemic first started, as well as actually to current to date. And there are opportunities that are out there for farmers and ranchers to maybe refinance, to take advantage of some of these opportunities that are out there for their operation.
Matt, I know you mentioned a little bit about Farm Credit Services of America. You guys have a lot of great programs that can help farmers and ranchers. I know the cashback dividend is a big one you guys talk about a lot, but maybe highlight a few things you want farmers and ranchers to know that is going on that can help them right now at Farm Credit Services of America.
Yeah, right here we want to be, a valuable partner with farmers and ranchers, within the community, within rural America, and we want to continue that tradition. We've got about over 70 affiliated farm credit areas within the farm credit system, and we just want to be a valuable partner with farmers and ranchers in the financial space, as well as the rural community. And anytime you look at our cashback dividend or our patronage program, what's really important there is too is farmers can take advantage of that. We do give patronage back to our customers, and by turn that helps rural America. Putting in those resources farmers and ranchers do, for things like equipment, for things such as so, that is an added benefit to being a farm credit customer, and, getting some of that, working capital back to them as well.
Well, I know folks can learn more. FCSAmerica.com is a good way to start. Matt, any other final thoughts you have for us here, real quick before we run out of time?
I think one of the big things, as we look into 2021 and kind of transition to 2022, first I think when we look at the harvest for corn and soybeans here coming up here, first and foremost, hopefully every farmer and rancher has a safe and successful harvest. But then two, I think what's interesting with what we've seen here in 2020, or going from 2020 to 2021, is just really unprecedented. And there's a lot of opportunity to build up working capital. But as we've worked with our customers, I think what's going to be important is when we head into 2022, how we can manage that working capital in terms of maximizing the potential for each and every farmer that's out there. So, we're going to be doing some education on some of those things with our customers, as well as the rural community at large. But I think we just have to be prepared in terms of the volatility that's out there. But take advantage of the good times while they're out there, and make sure that we're prepared for the future.
Well, I know folks can learn more again. FCSAmerica.com is a great place to start with that agriculture, economic, and policy advisor with Farm Credit Services of America, Matt Erickson. Thanks for joining us today. We appreciate the time.
Yeah, thanks, Jesse. Thanks for having me on.